Hi, this is Hardik and I want to show how the trading stop loss can be used based on the strategy. As you can see, this is the candle. The close of this candle was 2720. This close was much below the moving average. The moving average was at 2728. Now 2720 falls in the range of 2030 to 2020. In the range of this 10 pips, the moving average was above 5, that is like 2725, which means it is a valid situation to go short. We shorted the trade at the level of 2720. The stop loss for that was the previous blue candle or the green candle close, which was above the moving average, and it was above also the close. The range of that candle was from open to close, which was like 2730 to 2740. The moving average was at 2728 for the existing candle. So 2728 and the close of this is 2740, which is a valid stop loss. So we placed our stop loss at 2740. In the very next candle, the trade moved in our favor, so it went to 2710. At this point in time, the moving average is at 2724. The previous candle is in the range of 2730 to 2720. The existing candle is in the range of 2720 to 2710. The moving average is at 2724. So for the previous candle range, it is below 2725, which is valid for moving the stop loss. So our next stop loss happens exactly at the open of the previous candle, which is the 2730. So now our stop loss, initial stop loss was at 2740. Now it has moved to 2730. Moving forward, the another candle occurred and the trade moved again in the favor of us. So at this point in time, the close is at 2700. It was in the range of 10 to 00. The previous candle was in the range of 2720 to 2710. However, the moving average has not moved that much fast. The moving average is still at 2721. So the candle to be considered should be in the range of moving average, which is like 2720 to 2730. Now 2721 is definitely below 2725. So our stop loss should be at 2730. However, we already have the stop loss at 2730. So we are not going to do anything here. Moving forward, the candle moved from 2700 to 2790. Observe that at this point in time, the moving average has gone from 2717. It has gone to 2717. Now at 2717, it is in the range of 10 to 20. However, it is like more than, it is not more than 50%. So 2717 and the close of the previous candle was 2720. Does mean that it is not more than 50%. So we cannot move the stop even at the close of this candle. Still moving ahead, 2690 and 2680. Now at this point of time, the moving average is at 2711. So the range is from 2710 to 2720. 2711 is definitely more than 50% of 2720. So we are now going to move the stop to 2720. Now let's take the example of this green candle. The market moved little against us. The close of this candle is at 2790. However, the range for this candle was from 2680 to 2690. The moving average is at 2703. Now 2703 falls in the range of what? 2700 to 2710. 03 is less than 05, does mean that it is more than 50% in the favor of us, and so we are going to move that stop loss at 2710. Now this is the candle which is ongoing. If this candle does not, if it goes against us, and suppose if it is creating another green candle, then the open of this candle is right now at 2690. So its close would be at 2700. It would be exactly like this candle. It would be exactly like this, but that would be a green candle. When it will be closing, the moving average will be very much within the body of it. Then we will be having the moving average at right now 2698. At this point of time, 2698 is a moving average level. It is falling in the range of 2690 to 2700, but 98 is not less than 95. Does mean that we cannot move the stop loss to 2700. So we have to keep the stop loss at 2710. This is how the trading stop loss is going to work. Let's assume the case of the going long. So this is the candle whose open, it is falling in the range of what, 3180 to 3190. The moving average is at 3184. Now for moving up, we will be always breaking the range in half, which would be, the half range would be 3175. Moving average, the half range of this candle would be 3185. The moving average is below the half range, so it is a valid long setup. So we got long at 3180, and the stop was exactly at the open of the previous green candle, which was 3170. So long at 3190, stop loss at 3170. Next candle, it moved in our favor. At this point in time, the moving average is right at 3186. So it is falling in the range of 80 to 90. However, 86 is not more than 50% of 90. What I am saying is, the range is 80 to 90. For moving higher, we want the lower half of that particular range in which moving average should fall. But unfortunately, it is at 3186, which is the upper half. We are not going to do anything here. We will see what happens next. The next candle happens. Now the range of this particular candle is it's 3200, 321 to 3210. However, the moving average is at 3187. Assuming the range of moving average is now 3180 to 3190, but market has moved almost 13 to 14 points ahead of the moving average. At this point of time, definitely we are more than 50% of the previous range of the candle close, which was 3200 was the open, 3210 was a close. So the previous range of 3200 is 3190 to 3200, and 3187 is definitely much less than 3200. So now our stop will move to 3190. I hope it's a bit confusing, but would get more clear with little more further communication from both the end. Thank you.